Hey, welcome investors to the 40 Finance channel. My name's Jeff Beers. Today we're going to look at Google stock for fiscal year 2021. We'll take a look at where Google stock sits today and what the outlook is for 2021 and beyond. Google is not a stock that I own as a standalone stock, but it's well represented in my IRA across multiple ETFs, most notably QQQ and FDN. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research before investing in any stock. And of course, if you like stock market analysis like this, please give this video a like, subscribe to the channel. Thank you to everybody for all of your support. All right, so Google's one of those stocks, no one's ever gonna tell you don't buy Google in terms of a long-term investment. Their growth prospects for the next decade or so look pretty tight, at least in the world that we can see today. And when you compare Google to some of the other more popular high growth names that are out there right now, it's relatively inexpensive in comparison. But like all stocks, the decision tree for Google is usually pretty simple. What is the price today? Where could the price go tomorrow? And what are some of the short-term events that may influence the price over the course of the next year? Now, if Google has any storm clouds hanging over their head right now, it would be sort of the threat of privacy and monopoly regulation coming from the US government. This is something that's been talked about for a long time, and it's really difficult to tell like how severe of a penalty would actually come down on Google. Because while there's a loud crowd of folks clamoring privacy and all the things that we've heard over the past few years, the bottom line is that Google offers a pretty valuable service that I would say, 8 out of 10 people would gladly give up a certain amount of privacy to inherit the benefits of Google services. Now, obviously, everyone's got their own opinion on that, but it's hard to foresee the government, say, taking away the functionality of Gmail or YouTube or something like that, because at the end of the day, that would really rock the boat in terms of customer satisfaction, not to mention voter satisfaction. And ultimately, Google would have to figure out, if we can't advertise XYZ, does it make sense for us to even offer the free Gmail services? And you could really go down a big rabbit hole on the privacy end. Now, another concern with Google for some investors is the fact that their cloud business, which of course is competing with AWS, Microsoft Azure, all those things, they are pouring money into the cloud business, and it does not produce an income right now. So their cloud business is a losing venture. Same with the Google Bets side of, the Waymos and things like that. But on the bright side, the Google Services category carries all the cloud and other bets categories and still makes a profit. So some pundits will say, Google Cloud has XYZ on the customer base and things look pretty solid revenue-wise, but it's still not profitable. But the other side of that argument is, do you think that Google is spending their money well to build up the cloud business, taking some profit away from the services business? It's really just a choice as an investor on which side you pick. All right, here's a quick peek at the new reporting segment structure that Google's using for their fiscal years going forward. This comes out of the February investor letter. And over here is 2020, and you've got revenue at the top, incomes at the bottom. You can see that services at $168 billion led the way in revenue. However, cloud coming in behind it at $13 billion in revenue. So if you just looked at the revenue column, you would say, okay, well, cloud's building up. It's the second revenue source and everything looks fine. But if you took a moment to scroll down to the operating income or loss from the segments, you would see that Google Services at $54 billion carries the rest of the ship. And by the time you get down to the bottom line, you have $41 billion in operating income. So the question as an investor is, do you believe that Google's doing the right thing to invest in cloud, other bets. The corporate costs, not much you can do there because that includes litigation and stuff like that. You know, from my standpoint, the cloud and bets categories are super important for the future revenue of Google. So I have no problem that they are pouring money into these two categories. All right, taking a look at Google stock today, $2,061, a little bit of a down day today. But you see on the one-year chart that it has been a pretty good run for Google. And I think the most impressive part about this past year is if you think about the different categories of advertising, which of course advertising feeds their income at the highest level, you know, travel advertising got basically pulled completely, and every other type of entertainment advertising went down as well. Not to mention that companies, big advertising companies who are unsure where COVID would land, they likely pulled back their advertising spend, right? So when you consider the downward pressure that was on Google with advertisers bailing, they really nailed it last year. In fact, in the second half of the year, Q3 and Q4, they absolutely crushed earnings expectations. All right, fundamentals today. You have an EPS of $58 over the last 12 months, P/E ratio of 35.30, and the 52-week range, which of course includes some of the COVID time period. You're basically between $1,000 and $21.52. All right, on the analysis tab, year ago EPS 58.61. That is projected by 36 analysts to grow to 69.81 this year, and next year at 81.28. So if you took a stock price of $20.65 and you divided it by 69, which is where they're supposed to land this year, if projections hold true, that would give you a P ratio of 29.92. So just under 30 on the forward PE. Obviously, things take another leg up in 2022. Now, if we look at the statistics page for Yahoo, we can see that historically, over the past several years, these are years, not quarters, the trailing PE for Google has been in a range of 35 in 2015, dropped some in 2016, 17, 18, and 19, you're all in that 30 to 35 range. So on a forward PE level though, it has been a little bit cheaper in the 25 range. But generally speaking, from a historical basis, Google's price today is about the same as you would have found a few years ago. All right, taking a peek at earnings and revenue estimates on Seeking Alpha, and it's pretty cool to see how the EPS is projected to grow. This obviously is reality. These years are in the past. Then you go 69, 81, 92, which is exactly the kind of growth, profit growth, you want to see from a stock in your portfolio. Okay, looking down at the sort of numerical part of that, if those EPS estimates hit, you get an idea of where the growth and forward PE will go. So in 2021, you would have a forward PE of about 30, depends on what the stock price is on the day. That drops in 2022 to 25, and it keeps going down, right? So your cost of acquiring Google today over time goes down. So that's exactly the type of fundamental look you want from a stock. And on the revenue side, the graph doesn't change much, right? It's going exactly in the direction that you hope it would. And you can see revenue growth, at least the projected, and you know, probably sticking to these next 3 years because that's when you have the most amount of analysts coming in and sharing their opinion, because ultimately this is an average, right? So the more people you get in, the better the average is going to be. But 21, you've got 23% growth, 16, 13, 14. That's about as far as I would go before I trust any analyst to project revenue growth. And frankly, I would say that it's hard for me to envision a world that Google doesn't have at least 15% revenue growth, knowing what we know about the loss leader in cloud, should, I would imagine, turn profitable somewhere in this neighborhood. So, take these numbers with a grain of salt. This is probably the only two that you can feel really good about because they're in the nearer term. All right, taking a look at TipRanks to see what the best performing analysts have to say about Google. Most of these guys and girls did their update about a month ago. Again, we only do the best performing analysts, so all these people are 4 and 5 stars. The most recent update was 13 days ago, a buy at 2,400. Then you have 2,250, 2,750, another 2,400. I guess if I had to pick a median, I would say, 2,400 sounds about right for me. If we go back to the Analyst tab on Yahoo, you get a feel for companies like Google on these EPS trends, right? They continue to go up as the company reports new news. So today's EPS projection in 2021 of $69, I mean, honestly, I bet $1 that it's going to be way over 70 by the time we get into October and November. So 90 days ago, that sat at $61. 30 days ago was about the time that they came out with their new earnings report, so analysts adjusted. And the same thing's happening in 2022. So don't be surprised if this lands, between $83 and $85 from a projection standpoint. So even though we talked about a forward PE of, 30 or 29 based on this stock price, if you continue to see EPS projections going up, then the multiple certainly gets cheaper as those earnings go up. So from a chart perspective, what is a good time to get into Google? And this is just a simple chart. This is a 6-month chart. We can also go, 1 year. But no matter how you look at it, in my eyes, if you think that the stock market is going to have pullbacks coming ahead this year, which is sort of in the camp that I sit in right now, particularly with interest rates kind of spooking everybody. But you look at the chart by itself, and it sure would be nice to sneak in under $2,000. Got this 50-day moving average of 1975. If you want to go bargain hunting or you want to be patient for bargain hunting, you had 1736 in January. So big dips can happen, although Google is seemingly settled into a nice foundation here. Looks like in all the March volatility, they went down to 2024. Looks like it was about the low. So who knows? Will you get under $2,000? That's hard to tell. All right, so Google, like so many other stocks, the best way to invest it is in the long term by picking up shares and holding on to them for a long time. However, from price target perspective, if you are going to focus on 2021, I feel like a 2,400 to 2,500 price target for where it could be by December, that feels really, really good, seeing what we've seen about the EPS and revenue numbers continuing to trend up. As far as the best time to buy in 2021, I'm always got my eyes open for a dip or some sort of correction across the stock market that makes a lot of stocks cheaper. And in that scenario, $2,000 or slightly under $2,000 seems like a pretty good bet for Google. That enables you to get a 20 to 25% return on your investment within the first 12 months of owning it if those price targets come to fruition. All right, guys, so those are my takes on Google. Great company, great long-term investment. This is a stock that I'm interested in, mostly because I'm running that barbell strategy on my individual stock portfolio where I have high risk balanced with some names that I can count on. Google would fit very well in the names that I can count on to produce in the future. So don't be surprised if I pick up a couple shares, particularly if we see that under $2,000 mark. All right, guys, thanks for watching. Please give the video a like and subscribe to the channel. We will see you on the next video.